Good morning or good evening, depending on where you are in the country right now. My name is Josh Elohim. I will be your speaker for today. And just a quick heads up, everyone's going to be muted for the purpose of this conversation. And at the end, all my information will be there for a phone call or an email to ask any questions or to run any quotes or illustrations. Just a little Reader's Digest version about who we are. BackNine Insurance is a boutique general agency. We focus on life insurance, long-term care, annuities, and disability income. All right, so let's go ahead and get started here. The webinar today is regarding tax-free retirement. A quick little disclaimer. All right, everyone kick off your shoes and let's have some quick fun here. So one of our niches, like I mentioned, is life insurance. And what we've seen in the past is a lot of time when you go into a conversation with a client and you talk about life insurance too early in the conversation, you tend to get the door slammed in your face. So what we did here is we set up a marketing piece that really targets the client's biggest issue. And what we found is that it's taxes. So what you'll look here, you'll see some of the increases that have happened in taxes as of late. Top tax rates have gone up 4.6%. You have Medicare payroll taxes have gone up 0.9%. Long-term care capital gains and qualified dividends up 5%. Unearned income, Medicare contributions up 3.8%. And then you have both your itemized deductions and personal exemptions have been phased out. So for clients who are making, $250 and above, they got hit really, really hard. So this is a great way to get someone's attention right away in the conversation. Some of the other things that can affect for retirement is Social Security is up to 85% of your benefits could be taxable. And then you have Medicare premiums could rise from $105 to $336 a month if your income exceeds $214,000. So the goal is to get people's attention when you go meet them face to face. So what we've done here is we've realized there's really three buckets where your client's money can be right now. First bucket is your tax-deferred bucket, so you have your 401ks, and then you have your taxable bucket, so you have your stocks, your bonds, your mutual funds, and then the last thing we've seen is you have your tax advantage bucket, so muni bonds and Roth IRAs. So we believe very heavily in these three buckets. We're never telling anyone to go away from this, but the challenge that we've seen is that, okay, well, here's how are we being taxed in those buckets pre-59.5 all the way up to 70.5. So we look at 59.5, you have ordinary income tax plus 10% penalty, and then you also have tax-deferred bucket becomes taxable. At age 62, too much to modify a gross income, 85% of your Social Security benefit could be taxed. And then at age 65, you have Medicare Part B cost increase from $105 to $336 a month. And then at age 70.5, your RMDs, require minimum distributions, add to your tax exposure as well. So the question is here, would you agree it's not how much money you make, it's how much money you get to keep. So when you show people how they're being taxed on their money, you tend to get a really, you get their full attention on it because they want to keep as much money as possible. So here's really the main question. What if there's a way, if I could show you a way how to get non-reportable tax-free income? Is that something you'd be interested in? And I assume the answer is going to be yes there. So there's one more bucket that you might not be familiar with, and it's called life insurance. Well, I thought life insurance was just for a death benefit. No, that's called term insurance. So now we want to talk about permanent life insurance for your clients. So just to go over let's go over the same scenario of 59.5 all the way up to 70.5. So you have an income tax redistribution without penalties at 59.5. You also can access income tax-free funds with some of the policies. So at age 62, there's no effect on your Social Security benefits. At 65, there's no effect on Medicare Part B. And then at 70.5, you're not required to take a minimum distribution. So I'm seeing a lot of RMD cases come in right now for clients who did not need those distributions. I just had a case recently done for a 70-year-old. We're putting $55,000 into a guaranteed UL, which is kind of like a term for life. And so those cases are out there happening. And I had a conversation with the agent. I said, do you have any clients who have, RMDs they have to take, but they don't need the money? And then we got a case for, a $55,000 target premium. It brought about $3 million of death benefit. So these cases are happening right now as we speak. So some of the other benefits, tax-deferred growth, according to IRS Section Code 72E1. Then you have tax-advantage distributions, so IRS Code Section 72E5C. No additional taxes for early withdrawals. And then the one I like the most is obviously your income tax-free death benefit. So there's a lot of benefits when it comes to cash value life insurance, and we're having a lot of success in this space here. Some of the sweet spots that we're seeing here, it could be anyone that's putting the money away or anyone wants to save for retirement. But we've seen, $250 of income and above has been a really hot spot for us. Now, we're in California here, so you could have someone making $1 million a year, but if they're spending $1 million a year, then it's potentially not a candidate. You have to have money you're putting away. Ages ranging from 30 to 50 is kind of a sweet spot. Again, if someone's doing well, in their 20s, it's a great opportunity the younger you are because you have more time for the money to mature and grow, and then that compounding interest takes effect. And again, it could work for someone who's 60. You just don't have as much time. Clients who have maxed out their 401ks or their Roth IRAs are really good conversation to have as well. Some of the target markets we're seeing industry-wise, it could be anybody, but doctors we're having success with, lawyers, CPAs, investors. Again, if you're putting money away, this is a great opportunity. So mostly white-collar clients, because really we're going to go over an illustration here, but the whole overfunded concept is really where we're having a lot of success, and I'll explain why here shortly. So just to go over a quick sample case here, we have a male, age 45, relatively healthy, so we have a preferred non-smoker. We're going to use the index strategy. So an IUL, if you're not familiar, IUL can be based on the S&P 500 or some other indices as well. And what happens is that you have caps and floors. See, in the past, we had VUL to sell, and it was great when the market did 20%. Everyone was extremely happy. But then when the market did minus 20%, your clients were very upset. So they created IUL to offset the market volatility of VUL. So now you might have a cap of anywhere from 10 to 20% depending on the carrier, but you have that 0% floor. So in the situation now where the market does 20%, you might get 10, 11, 12 credited to your account, but when it did minus 20% the next year, now you have a 0 floor. So your client participates in the upside, but not the downside. So we use the 7% interest rate here. Every carrier fluctuates with the maximum that you can use. And then we also went with a minimum death benefit, maximum cash value play. And there's two reasons for doing that. First reason is when you lower the death benefit down to the minimum, you lower the cost of insurance charges also down to the minimum. And another thing that happens is that when you lower the death benefit, you lower the commission down to the minimum for the agent. So your client knows, they feel warm and fuzzy knowing that you're doing everything possible in order to be able to stuff that policy with cash. We also run these to the MEC limit, which is the Modified Endowment Contract limit, and that way the policy does not become a MEC. So let's go ahead and give you a quick visual here of this illustration. So here's the actual illustration. Again, we're putting in $50,000 for 7 years. Now you can do this on a 5-pay, you can do it on a 10-pay. What I've noticed is when you're talking to these high net worth clients, it is easier to talk about a shorter pay period as opposed to saying pay something for the rest of your life. They can see 5, 7, 10 years down the road. It's hard to see for a lifetime. And then so the minimum death benefit brought us just over $1 million of death benefit. So that money goes in there, and what we did here is we set it up where the client at retirement age, at 65, what we wanted to do is show what max distributions it would be going in for 20 years. So the client puts in about $350,000, and then you see that income coming out for 20 years. And so that buys roughly about $1.6 million in that range of death benefits. So not a bad setup. Now, how does this work? You know, compounding interest, the client's young, they're healthy, the money's growing in the policy. Obviously, some years it could do better than 7, some years it does worse, but on average, you're getting about a 7 or 8% return. And then once you factor in, you know, the tax-free part of the equation, it's a really good story to tell. Now, there's always a question about how does money come out tax-free? It's always been a gray area. Well, I want to give you a quick explanation of how this works here. So let's just say, for example, you put in $100,000 into a life insurance policy. Well, you're able to pull out $100,000, which is going to be up to your basis, without any tax consequences. And that happens via a withdrawal. So then what happens is the next dollar that comes out of that policy, now what you're going to switch over to a loan. And here's where you become your own bank, because that carrier might charge you 2 or 3 or 4%, depending on the carrier, for that loan. But at the end of the year, they'll turn around and credit you that same 2 or 3%. So it ends up becoming what's called a wash loan. Now, as long as your client dies with this policy and does not surrender at any given time, the money that goes to the beneficiaries is tax-free. Now, just a quick heads up, a lot of the insurance carriers we work with now, these policies have what's called an overloan protection rider on there. So what it does is that if this policy gets overloaned, or if it's going to die, it'll automatically shut off and turn into a paid-up policy. So a really unique feature, and that way you don't have to pay any phantom income on these policies. If you have any questions at the end, I'd love to talk to you about this, and I'd love to see if we can get some quotes ran as well. So there's that case study there. So one thing I want to talk about here is that some of the challenges a lot of your clients are facing is long-term care, and I hope you'd all say yes if you could answer. Well, what we've noticed is that these carriers finally got smart here, and they added what's called a long-term care rider. Now, the challenges I've seen in the past with long-term care is it's extremely expensive, as you'll see. You're not locked in. The cost keeps going up, so your price is not set. And the underwriting can be extremely difficult. It's really a pass or a fail with underwriting. And then it's really a use it or lose it scenario. You could pay the premiums for 20 years, and if you don't use that long-term care, you just wasted all that money. So what the carriers have done, they've really gotten smart here, and they've added what's called a long-term care rider to their policies now. So just to give you a heads up in terms of pricing, if you were to review a policy 5 years or newer for long-term care, and the same thing for life insurance, there's a good chance that it could be up to 50% cheaper by adding the two policies together as opposed to paying for traditional long-term care. You can get up to 4% on a max monthly basis accelerated, depending on which carrier you go with. Their premiums are locked in, so it's a life insurance chassis, so you pay your premiums, you have your long-term care, you have your death benefit. And the key thing is, no matter what happens, the benefit's going to be used. So the phrase we like to use now is living benefits. When I talk to agents, I tell them to ask their clients, do you have the old kind of insurance or the new kind of insurance? And they'll say, what do you mean? Well, the old kind of insurance is geared really towards a death benefit. The new type of insurance is, what can I get while I'm alive now? So we're having a lot of success with that, and we do have some marketing pieces as well. Just to go over a quick sample case here, let's just say your client, we sell them a $500,000 life insurance policy. We add a long-term care rider. So what happens now is it simply gives you a pool of money of $500,000 for long-term care. So if there is a long-term care need, then it just accelerates the death benefit dollar for dollar. So for a quick example, if I had a $500,000 policy, I needed a long-term care for a year, and just so you know, to qualify for this, it's the same as long-term care, 2 of the 6 ADLs, 90-day elimination period, and you can accelerate the benefit. So that's how it works there. Just to give you a quick little visual, so you put the premiums into the life insurance policy. It's going to buy that pool of money for the life insurance for long-term care, and if you decide to go with the cash value policy like we're talking about here, you can go ahead and get cash in that policy as well. So you really have a 3-prong approach with death benefit, long-term care, and cash value. And then that accelerates, and then you get that monthly benefit of whatever, up to 4%, depending on which carrier you go with. I'm seeing this added on younger and younger clients as well. By the way, this rider can be added as low as 18 years old, all the way up to age 80. So just a quick example, I had a friend of mine's wife was looking at a policy, and I said, let's add the long-term care rider. It ended up being 8% more. The premiums, when you add this at a younger age, are extremely less. So why not put it on there if it's not going to be a burden on the premiums? And then that way, she's covered for $1.5 million of long-term care, if God forbid, if anything ever happened. She has cash value in the policy, and she also has a death benefit. So that's called the new type of insurance. If you want to use that phrase, it does work a lot. And then, like we talked about, any portion of the benefit is accelerated. So all right, give me a second here. So we have some marketing pieces that we created. A lot of GAs will do these webinars and really not give you what you need to go in front of the client. We're all about you, and we work for you, and we want to make sure you have what you need to go in front of your client. So here's kind of a summarized version of what we talked about today. And just so you'll see on the top right there, you can add your logo to anything we're talking about here. Again, we're not about branding ourselves here. We work for you, and we want to make sure that you get business. So if you take a look here, you can add, if you have your logo, let's talk after, you can send it over in, and we'll put your information there. So taxes is the first thing you're going to see here that we talked about in the beginning. It goes over the increases, and then you have your 3 buckets that we talked about, and then how you're being taxed on those buckets, $359.5 all the way up to $70.5. And then it talks about, what if there's a way, if I could show you how to get non-reportable tax-free income. And then it talks about the 4th bucket, which is life insurance. I personally use this on a doctor that I work with, a friend of mine. He makes $500,000 a year, and it was a very clear story for him. He understood it very quickly. You don't have a lot of time with doctors, so it's a quick thing you can run through there. That's the 1-pager. I call it the bucket sheet, and I'd love the chance to see if we can brand that for you and help you to use that in your presentation to get more business. Another piece that we're having success with, sometimes you got to keep it really simple, the old acronym KISS, keep it simple, stupid. Well, I'm sure this has probably never happened to any of you before. When you go into a client meeting and they tell you they already have insurance, and you're like, oh, great, so what do you have? And they tell you, I have no clue what I have. I bought it 10, 15 years ago. I put it in my drawer, and now I have no idea. I'm sure it's never happened to any of you guys before, right? Sarcasm. So take a look here, policy review. It's a very simple thing to offer your clients. If you do any emails, you can email out to your client. If you go to the 2nd page here, all your client has to do is just fill out this top section here with their information. You send this form back to BackNine Insurance. What we'll do on your behalf is we'll go ahead and we'll reach out to the carrier, take the time, and we'll grab all the pertinent information so you know exactly how much cash is in that policy. When is it going to die? What's the situation there? So now if you go ahead and scroll back all the way up to the top here. So based on the information that comes back, we're going to do research for you here. And let's say the client's looking for the same death benefit, lower premium. We'll give you 3 or 4 options to show you what your options are there. Let's say it's the same premium, higher death benefit. We'll give you some options. What we see a lot of with some of the older age clients is, you know what, I don't want to make any more payments. I have this cash in this policy. Let's go ahead and do a 1035 into a new policy, and we'll show you no more premiums payments. How much death benefit can I get there? So we're having a tremendous amount of success here. I can't tell you how many times we get a call from another agent whose policy that they said we want to review here, and then a conversion turned to permanent insurance because of a policy review like this. It's a simple way to stay in front of your clients, and it's a simple way to let them know that you're doing, you're reviewing and you're keeping up to date with their information there. And again, you can brand your information right here on the top right there. So really good piece that we've had a lot of success with. Love the chance to help you guys out with that. Last piece I want to talk to you about here, long-term care has been a really challenging issue for a lot of people. A lot of agents I know it's a challenge, but it's been really frustrating for them with traditional long-term care, all the things we went over here. So we created a marketing piece. It's just a one-pager. Again, there's your logo on the top right there. It just talks about, living benefits. What are they? It talks about long-term care. But the thing I like the most is it talks about what are your chances of experiencing a fire, 1 in 1,200. What are your chances of being in a car accident, 1 in 240. Your chances of needing some kind of long-term care is 1 in 2. Now, most people have insurance for other issues. Well, let's talk about, long-term care here. So if you take a look here, you'll see some of the cost of long-term care from now, 2015, being about $75,000. In 2048, we're at a whopping, almost $500,000 of what it's going to cost for long-term care. So it shows you how the long-term care rider works, which we already went through a little in detail. And it has a case study of, Mary, 55 years old, whose parents had some major issues with long-term care, and it really affected her. She did not want to be a burden on her kids, so she bought that, life insurance policy with a long-term care rider for $500,000. Now, if there is a long-term care need, she's covered. She has everything she needs there. So we've had a lot of success with this piece. It's long-term care riders. If you're not selling it, we definitely need to have a conversation about that, okay? Our whole goal here is to help you to close business. We're just like you. We don't get paid $1 unless something closes. So we really want to maximize your benefits and help you to grow your business. So all my information is here. I'd love the chance to speak to anyone about any of these products. We have access to 40+ life insurance carriers. We have a little bit of everything here. We have the resources, the tools to help you to get your business to the next level. So I really appreciate you taking the time to sit here with me today. My phone number is here. My email is here. Love the chance to brand some marketing material for you and help you get your business to the next level. Thank you again for attending, and have a blessed day.